The new week will be extremely busy for investors. Apart from the Fed meeting, a batch of fresh market starts on the US labor market is on tap. Yet Monday is likely to be rather quiet. Trading floors in many countries are closed on a holiday and there will be no earnings reports. For this reason, investors will mainly focus on economic reports, namely the US Manufacturing PMI Index. InstaForex analysts have already prepared a recap of the American session. Let's discuss its main highlights. The US benchmark stock indexes closed last week with a rise amid positive earnings reports and the PCE Price Index. The Dow advanced by 272 points or 0.8%, whereas the Nasdaq added 0.69%. The S&P 500 scored the biggest gains, dropping by 0.83% to 4,169. Today, pre-market trading was rather lackadaisical. Movements of the stock futures were mixed. They eventually remained almost unchanged, fluctuating between minus 0.05 and plus 0.08, given that the US PMI data will be released after the American session. Stocks may change their trajectory later, and the S&P 500 is projected to remain in the range of 4,110 and 4,190 points during the US session. US consumer spending was unchanged in March, while underlying inflation pressures remained strong. The annual core PCE Price Index, the Fed's preferred gauge of inflation, edged lower to 4.6% from 4.7%. However, it fell short of the forecast reading of 4.5%. Other indicators signaled a bigger-than-expected contraction in economic expansion in the first quarter. A drop in consumer confidence in April reinforced recession fears. Personal income increased, while expenditures remained at the February level. Unlike mixed economic data, earnings reports were quite upbeat. ExxonMobil shares advanced by 1.3%. After hitting an all-time high, and the company reported a record profit in the first quarter thanks to an increase in oil and gas production. Intel stock grew by 4% after the company said margins would recover in the second half of 2023. However, Amazon shares fell by 4%, its biggest one-day decline since early February, despite better-than-expected revenue results. The company warned that its long lofty cloud growth could slow further. First Republic stock plunged by 49% to $1.77 after reports that the lender was preparing to sell its assets. The Fed revealed a detailed in-the-hash assessment of its failure to identify problems and push for fixes at Silicon Valley Bank before the lender's collapse. The regulator promised tougher supervision and stricter rules for banks. Snapchat shares took a nosedive by 17% after it warned that its next profit results could fall below Wall Street's targets. Pinterest stock dropped by 15.7%, following lower revenue expectations for the second quarter. At the same time, the S&P 500 rose over the week, noting a second consecutive monthly gain. This increase was facilitated by higher-than-expected revenues of mega-capitalized companies, including Alphabet, Microsoft, and Meta. The S&P index gained 1.5% over the months, while the Dow Jones added 2.5%. Trading activity in the United States stock market was subdued on a Monday as investors shifted their attention to the upcoming Fed meeting to be held this week. Before the opening bell, the focus of market participants was back on the banking sector. First Republic Bank closed, and the US regulators agreed to sell its assets to JP Morgan. The latter was one of the number of interested buyers for First Republic, which had been on the verge of a collapse since early March when Silicon Valley Bank and Signature Bank imploded. As reported on Monday, JP Morgan agreed to buy most of the bank's assets. The bank has entered into a loss share agreement with the FDIC on a single-family residential and commercial loans it bought, but it will not take First Republic Bank's corporate debt or preferred stocks. The deal allows for an orderly failure of a First Republic and avoids regulators having to insure all deposits, as they did when two other banks went bankrupt last month. This in turn makes the largest US bank even more massive. Meanwhile, First Republic shares plunged by 38.5% in a pre-market trading. JP Morgan shares advanced by 4.6%. As for corporate earnings, traders should pay attention to Apple's quarterly report to be released Thursday. Analysts now expect first quarter earnings for the S&P 500 companies to decline by 1.9% from a year ago, compared with a 5.1% drop anticipated in early April. After the opening bell, traders may take notice of data on a manufacturing activity in the United States from the Institute for Supply Management and S&P Global, as well as statistics on a construction spending from the Commerce Department for March. With many markets closed for International Labor Day, the Institute for Supply Management, with its April manufacturing PMI, will have a limited impact on investor sentiment. Notably, the news that the US manufacturing activity slumped considerably in March was an unpleasant shock to those who had hoped the economy could withstand surging inflation and the Fed's fastest rate hikes cycle indicates. The ISM Manufacturing Index is forecast to increase to 46.7 from March's 46.3, indicating an improving environment. However, it's still expected to remain below the 50 threshold for the 6 consecutive months. The index has not spent this long below this mark since the 2008 financial crisis. In fact, when the March figure was released in early April, Deutsche Bank noted that there had been only 4 instances where the ISM manufacturing reading was this low without a recession in the following 12 and 18 months. Speaking of the currency market, trading activity was subdued due to the Labor Day holiday weekend. The US dollar index traded mixed but turned negative closer to the opening of the US session. The index was down by 0.02% to settle at 101.7. Looking ahead, USDX is forecast to move in a trading range limited by the levels of 101.50 and 101.90. Currencies were in a limbo on Monday as a holiday in most of Asia made trading sluggish, while market participants braced for a busy week full of central bank meetings. The Reserve Bank of Australia is expected to extend its rate pause on Tuesday. The Federal Reserve is anticipated to raise rates by another 25 basis points on Wednesday, while the European Central Bank could surprise with a half-point rate increase on a Thursday. Unlike the ECB, whose interest rate decision at the next meeting is a poor intrigue, the Fed's decision is unlikely to come as a surprise to market participants. The focus of traders will be on the regulators toward guidance in its statement. Analysts at Goldman Sachs expected the Fed to signal a pause in June after delivering a quarter-point hike on Wednesday. Policymakers and markets still differ over the rate trajectory, and the world's largest central bank predicts that borrowing costs will remain at around current levels through 2023, with the investors betting on cuts after the summer. Futures markets show that investors are pricing in a nearly 90% chance of a rate hike. Nevertheless, the key focus will be on the Fed's revised projections and the Powell statement. As for the Canadian dollar, it opened the week under bearish pressure, following an impressive rally it showed on Friday. The USD CAD pair settled near the level of 1.3560 on the intraday chart, posting a rise on the 0.08%. The instrument is likely to trade in the range between 1.3520 and 1.3590. The loonie starts this week on a moderate note after rapid growth on a Friday, just as the rest of the forex market. The weakness of the US dollar could have supported its Canadian rival, but falling oil prices undermined the uptrend of the loonie. On a Monday, oil quotes were trading in the red, and Brent oil futures lost 1.6% to trade at $78.02 per barrel, while WTI crude declined by 2% to end up at $75.30 per barrel. Market participants evaluated the downbeat macroeconomic data from China. The manufacturing PMI for April dropped to 49.2 from a 51.9 recorded in March. The indicator slipped below the 50-point mark that separates expansion and contraction in economic activity on a monthly basis. In the light of the recent data, fears of a global economic slowdown are mounting again, thus putting pressure on the oil market. Still, oil gained some support from the OPEC Plus production cuts over 1.16 million barrels per day that come into effect this month. Bitcoin and other cryptocurrencies did not have a good start of the week. Digital assets dropped sharply on a Monday, with a Bitcoin losing 2.6% and reaching $28,500. Major altcoins also slumped, with Ethereum, Solana, Ripple and Litecoin suffering losses between 0.15% and 3.8%, and the looming policy meetings of the central banks this week have decreased the risk appetite in the market, and the cryptocurrencies were the first affected by the resulting pessimism. After soaring on earnings reports of the tech giants, the crypto market is now gloomy ahead of the Fed meeting. Today, the crypto market has declined by 1.9% on average, while its market cap has fallen to $1.23 trillion over the past 24 hours. Industry news have been mostly positive, in particular according to reports. Binance plans to return to the Japanese market after acquiring Sakura Exchange. Bitcoin CEBC is expected to relaunch as Binance Japan after June 2023. Additionally, Tesla's first quarter results showed that it kept its Bitcoin balance unchanged through the first 3 months of 2023, and the company reported it had the same amount of a digital asset in the first quarter of 2023 as it did in the fourth quarter of 2022, $184 million. On the technical side, despite the drop, Bitcoin is still within a range between $28,600 and $29,300. If Bitcoin breaks below its lower boundary it may well go down to $27,900 and even $27,500. A retest of $30,000 is unlikely at this point. This has been the Monday's report on the US stock market by InstaForex. We wish you a successful and profitable trading. Until next time, see you tomorrow.